Welcome to Citra21Channel, your portal to intriguing and dynamic content. Today, we dive deep into Play's imminent earnings release. In our detailed examination, we'll cover diverse facets to provide a robust understanding of Play's financial realm. Initially, we'll scrutinize the recent fiscal performance, decoding figures to portray the firm's present state. Then, we'll probe into the financial analysts' sentiments, assessing the market's general perception of Play. We'll also examine key technical indicators which might hint towards Play's future. Additionally, we'll delve into Play's market positioning and strategy, institutional ownership, and internal operations, as these aspects could shape the stock's performance. Conclusively, we'll talk about the anticipated earnings, knitting all the threads together for a comprehensive perspective of Play's prospective performance. Stay tuned to get the full scoop on Play's upcoming earnings. Diving right into the financial performance of Play, let's first discuss the reported earnings per share, also known as EPS. In the last quarter, Play reported an EPS of 1 cent. This could be indicative of a challenging operating environment or potentially conservative accounting practices. Moving on to revenue, the last reported figure was $466.9 million. There's a noteworthy point here, and that's the decline in the food and beverage segment. This segment reported a decrease by $38.67 million, which is a substantial 19% drop. This could reflect a strategic shift within the company, or perhaps a response to external pressures such as decreased consumer spending. What we're seeing here is a potential red flag. Food and beverage is a significant part of Play's business model. A decline in this segment could potentially impact Play's future earnings. It's crucial to monitor this closely. In the grand scheme of things, the financial performance of a company is a reflection of its overall health. While Play's recent EPS and revenue figures might raise a few eyebrows, it's important to remember that these are just one piece of the puzzle. Stay tuned as we continue to dissect other aspects of Play's performance and what they mean for the company's future. Remember, the decline in the food and beverage segment could potentially impact Play's future earnings. Now let's shift our focus to the analyst sentiment. The winds of perception seem to be shifting in the world of market analysts. The consensus regarding Play stock has taken a cautious turn, with a noticeable decrease in strong buy and outperform ratings. This suggests that these financial forecasters are adjusting their expectations for Play's performance, perhaps in response to the recent earnings report or market trends. In tandem with this, the new sentiment score for Play has also seen a slight dip. This could be a reflection of less favorable media coverage or a more subdued outlook on the company's future prospects. It's crucial to remember that sentiment can often be a significant driver of stock performance, and a negative shift could potentially impact the stock's momentum. The tempered expectations from analysts and the less favorable media coverage could affect Play's stock performance. Moving on to the technical indicators, let's delve into the MACD, RSI, and stochastic values and what they might signify for Play's stock. The MACD, or Moving Average Convergence Divergence, is currently showing a negative histogram value. This could mean that the stock is losing momentum and might be in a short-term downtrend. Next, the RSI, or Relative Strength Index, is in a neutral zone. This suggests that the stock isn't overbought or oversold at this point in time. It's essentially in a state of equilibrium. Lastly, the stochastic indicator shows that the stock was recently in overbought territory. This could be a precursor to a potential pullback, indicating investors might want to tread carefully. To sum up, while these indicators don't predict the future, they do provide an insight into the market sentiment towards Play's stock. As it stands, these indicators suggest that Play's stock may be losing momentum and could be in a short-term downtrend. Let's take a look at Play's market position and strategy. Play stands out in the market with its unique blend of entertainment and dining. This distinct offering has been a key factor in its appeal to a wide customer base. However, the recent decline in food and beverage revenue indicates a challenge that needs addressing. The company may need to innovate or adjust its offerings to re-attract its customers and maintain its unique positioning. Furthermore, while there's no specific data on geographic performance, regional economic downturns or restrictions could play a significant role in the company's future earnings. Therefore, it's crucial for Play to be proactive and flexible in addressing any potential regional challenges that might arise. In conclusion, maintaining its unique market position and addressing the decline in food and beverage revenue will be key for Play's future success. The company may need to adjust its offerings to re-attract customers and navigate any potential regional challenges. Next, we have the institutional holdings and insider activity. A significant part of Play's stock is in the hands of institutional investors. These large-scale investors can bring a sense of stability to the stock. They often have a long-term perspective, which can help cushion the stock against short-term market fluctuations. However, this also means that if these institutional investors decide to sell off their holdings, it could have a substantial impact on the stock price. Now let's talk about insider activity. Insider sales can sometimes raise a red flag, signaling a lack of confidence in the company's prospects. But it's not always a cause for concern. These transactions can be influenced by a variety of factors, like personal financial needs or portfolio diversification. Therefore, it's crucial to consider the context of these transactions rather than jumping to conclusions. Large-scale sell-offs by institutional investors could impact Play's stock price. And now, the moment you've been waiting for, the upcoming earnings expectations. Mark your calendars, folks, because Play is set to step into the earnings spotlight on the 2nd of April 2024 after the market close. Now, here's where things get interesting. There's a conspicuous absence of an earnings per share estimate. This lack of an EPS estimate is a bit like a foggy road. It makes the journey ahead less clear, and it means we need to be ready for any sudden turns. This absence of prediction might be a small detail, but it's an important one. It signifies uncertainty. And uncertainty, as any seasoned investor knows, often opens the door to volatility. So, as we approach the earnings date, it's wise to buckle up and prepare for a potentially bumpy ride. The uncertainty surrounding the earnings report could lead to volatility around the announcement. Finally, here are some actionable takeaways. Consider strategies that leverage expected volatility from earnings announcements, such as straddles or strangles, to potentially profit. The company's forward guidance is crucial, so listen closely during the earnings. Call for any strategic initiatives that might influence future performance. Lastly, keep an eye on analyst reactions post-earnings. Upgrades, downgrades, or price target revisions can significantly sway stock momentum. Keep these points in mind as you navigate the upcoming earnings announcement for Play. Disclaimer: the information provided in this video is for educational and informational purposes only. It should not be considered as financial, investment, or professional advice. Viewers are encouraged to conduct their own research or consult with a qualified financial advisor before making any investment decisions. Thanks for watching Citra21 Channel. Hit subscribe when you like it.